Hey everyone, how have you been doing? Well, the REIT market has been consolidating the last 2 weeks. So what have you been doing? In this video, we're going to share with you because as we move into this week, something exciting is going to happen. It's the Fed doing their meetings this week, going to signal whether it's the end of the whole 1.5 year of interest rates hikes, which saw interest rates move up from 0 to 2.25% to 5 and 5.25%. Is this the climax that you're seeing? Because it's very important, because if you can actually identify that, then you can see the rally that will actually ensue. But before that, let us basically go back to essentially what is actually this particular slide here. As you can see, ladies and gentlemen, when the real estate market actually started to move down because of the first interest rate increase on 17th of March last year by the Federal Reserve, you can see that it was a whoa all the way down, to the 21st of October last year, when the index for the REIT market hit 663. Henceforth, you can see that from the orange line, the REIT market has tried to stage three breakout, but all these three breakout basically failed in terms of actually trying to establish a firm rally, at least to the point in which the REIT market fell on 17th of March to 0.22. Now, essentially, how strong will the rebound be is exactly what we're going to address in this week's video. Ladies and gentlemen, this is a pivotal week because, as you can see in this chart, when interest rates peaked the last time round after a series of moves from 2015 December right up to 2018, the ensuing year, that's 2019, the REITs actually staged a remarkable recovery. For example, if you look at the top performing REITs, during that period of time, in the year 2019, you have the likes of Capital DC, you have the likes of Maple 3 Commercial Trust, and you have Ascendas India Trust, which all stage, huge jump of 30 to 40% gains. That's what you actually stand to gain if you pick the bottom correctly. And that's what we at GCP Global actually specializes in. But before that, let's come to essentially some of the worst performers that we've seen in the first half of this year. Well, first and foremost, ladies and gentlemen, you must get rid of all your underperformers out of the way, which is something that we've been rebounding since the last 3 years, because you can see that the worst of the REITs, for example, the likes of Prime REIT, Manulife, Elite Commercial, Capital Old, EC World has gotten worse with each passing week, with each passing day in the last 3 years. You can see that, not surprisingly, for the first half of this year, they actually made up the worst performing stocks. Do read our past articles as well as our past videos to actually suggest and tell you exactly when we were actually sounding very bearish on these stocks and REITs, and tell you to actually get out. In fact, for our GCP Global students, you notice that they told you directly in the class, so we save you a lot of money. That's why you must be able to avoid losing millions in order to be able to make millions in real estate investment trust, as what my book Making Your Millions in Real Estate Investment Trust have always set out to do. In contrast, ladies and gentlemen, look at the top 10 performing REITs for the first half of this year. Not surprisingly, many of these were REITs that we've mentioned in our various quarterly REITs classes. For example, the likes of Capital DC REIT, Fraser Commercial Logistics, Parkway Life REIT, which we have addressed in our past videos, Paragon REIT, Fraser Hospitality Trust, and Fraser's Trust. As you know, ladies and gentlemen, I am a major shareholder of Fraser's Trust, and essentially we have also shared in our class that we have re-established back positions when the share price went below the placement price of 235. In fact, the share price falling below 220 had been a field day for us to continue to accumulate selectively and slowly into the stock in the last couple of months. Also, ladies and gentlemen, one of the things that we have shared in our investment classes is this, that is actually when interest rates are on the way up, as they have been for the last 1.5 years, because it is critical to know when to sell your REITs, even though they are good REITs. Let me give you an illustration. For example, the 10 worst performing REIT is Capital Land China Trust, which was actually down 8.9% in the first half of this year. So just a recap, ladies and gentlemen, I was the top 20 shareholder of Capital Land China Trust way back in 2017. As you can see, I was the 20th largest shareholder with 1.66 million shares. And then, essentially, if we look at the next chart, that's what we're shared in our investment classes, our GCP Global REIT investment classes. We actually sold out of these positions way back in 2018 and 2019. Notwithstanding they are good REITs, it's just that we already anticipate the interest impact as well as basically the clamp down in China on Capital Land China Trust at that time. And you can see, not surprisingly, the share price has fallen from $1.60 or when we sold all the way down to below $1, and below $1.10. What will you do now? When the share price, notwithstanding is a good REIT, as I've mentioned, even though we have been catching up with the REIT CEO, over lunches and serious discussion about the REIT in the last couple of years. So what should we do? It's interesting, right? Something that we'll share again in our next investment class on the 9th of September. Now, moving on, ladies and gentlemen, you can see, ladies and gentlemen, that the last time in which the REIT staged a rally within this particular bear market was actually between the October lows that we saw on 21st of October right up to the 3rd of February. And once again, if you look at our video on the 3rd of February, we did tell you that it was time to take profit. And not surprisingly, you can see that the rally can be as much as 20%. For example, the likes of Capital World Trust, Capital Land Sanders REIT, as well as actually Capital Land China Trust. So of course, since then, the market has come down, and we are trying now in our third attempt to actually establish and break through this time around. Will it succeed? Well, it's something that we'll address in our next class on 9th of September. Do join us and enjoy the early bird special before the end of the month. Because at the end of the day, ladies and gentlemen, you can see that already we are in our second week. As you can see this chart, some of the better performing REITs, the share prices have just gone sideways. So how will it perform next week? It's interesting because we would be getting further guidance as whether interest rates have peaked. But what are the qualitative factors and quantitative factors that one should be looking at? But before I actually leave today's session, I just want to share with you this particular joke, that we saw in this week's, or rather last week, article. You can see that this article actually featured Manulife, and you can see that Manulife was hammered down to 10 cents, ladies and gentlemen. It was actually a REIT that we were forewarned about in the last 3 years. In fact, in my book, Making Millions in Real Estate Investment Trust, I already predicted that the share price would collapse, by more than 50%. Way back in 2019, and true enough, they have done so. But within this year alone, you can see that the share price have collapsed even more. And surprisingly, what did the management actually indicated this week in a press interview? They said that they were surprised by the huge drop in real estate values. Hello, you don't need to be very smart. You just read the various consultancy reports, CoStar reports, which Manulife actually relied on in the US. They were already forewarning on a terrible office market since 2002. Well, unless you haven't been reading it, So I find it actually very interesting that the management of Manulife was surprised on this huge drop in valuations. Well, in fact, in our GCP Global Investment classes, we have indicated that when it comes to real estate refinancing, as well as the likes of the commercialized, collateralized mortgage obligations relating to real estate investment trust expiring next year, and it's a huge amount, we probably may see a continuation of what we have seen this year. So don't be surprised. To a couple of analysts in the markets trying to pick up at this time, to maybe bottom fish. Well, we will discuss this in detail in our 9th September class. Contrast this, ladies and gentlemen, with another US office REIT. Yes, this is Capital Old REIT, where the CEO, David Snyder, has mentioned the two threats. That's basically AI, artificial intelligence, and its impact on the erosion of office market. I've actually interviewed David Snyder, and I'm actually very cognizant, and very happy that Capital Oat has actually been prepared for this, for this development. They basically do a few things like not actually taking prime offices as what Manulife has actually undertaken. Most of their offices are actually out in the Sunbelt areas where essentially the slide in valuations are not that severe. Two is that they don't take on large tenant at one go, so they are less exposed to concentration risk. So once again, ladies and gentlemen, a lot of the times, the elements of failure and success of a good REIT or a bad REIT, is very clear from the very onset. It's something that we share in our investment classes. So if you feel like you need to know more about this, do sign up for our online September class. Till next week then, and hopefully we get a great rally later part of the week after the Fed